A lot of people think the price of gold at 4,000 is high. I don't. I think it's low. Oh gosh, I've got a profit. Maybe I should take it. And I get that. And I've selectively been selling some that went up too much, in my opinion. But if I had to put this in baseball terms, I would say we're in a gold stock bull market, and I think we're probably in the second inning. The reality is they don't have a choice. If they don't print this money, the system is going to collapse.
Why do you say that you don't like the other cryptos? Are they not sound money for you?
They're really not.
I'm very pleased to welcome back to the show Lawrence Lepard. He is the founder of Equity Management Associates. He's a sound money advocate, and that extends to both gold and Bitcoin, both assets we'll be talking about. He's also the author of The Big Print, What Happened to America and How Sound Money Will Fix It. People should check that book out. Link down below. We'll put the link down below. It's been out for several months now. Lawrence, I've spoken to you many times in the past. It's always a pleasure to welcome you back on the show. And I like speaking to Lawrence because he follows both the gold and Bitcoin markets very closely. His company manages a gold fund, but he also follows Bitcoin and invests himself. So good to have you back, Lawrence. It's a very timely interview.
David. I've always enjoyed our conversations. I think you do a great show. So
I appreciate that. Thank you very much. Lawrence, I want to start by talking about the thing that's on my mind. The first thing that I would ask you, if I were in a bar with you having a pint of beer, do you like gold or Bitcoin more right now?
Well, right now, actually, I like Bitcoin more because it's behind gold. Look, first, let's just get some things out of the way. I love them both. They both have great characteristics, and they're both going to go much higher. And they're both ways of protecting yourself against inflation. One is more stable and has a longer history. That's gold. The other is more volatile, but can outperform gold and has kind of outperformed gold, although recently it's kind of been lagging relative to gold. And that's Bitcoin. And if you actually look at it, and I've been sharing this on Twitter, if you go to my Twitter feed, you'll see this. I've been sharing charts that show that gold tends to move before Bitcoin. Particularly if you go back to the COVID example, in 2019, the repo market blew apart and, the Powell pivoted. And so gold started going up, and then COVID hit, and then Powell really pivoted and started printing like crazy. And gold really went up. It was pretty interesting because Bitcoin sat there flat for some period of time, a fairly significant period of time. And then, of course, Bitcoin woke up and went from 10,000 to 60,000 in a short period. So, gold smells out debasement quicker and more, easier, in my opinion. That's because it's more broadly held. But then Bitcoin, once everyone realizes the print is on, Bitcoin's pretty liquidity sensitive and it tends to run hard. And so if you kind of look at gold, has gone up quite nicely this year, and gold stocks have gone up even more. And Bitcoin's up, but not relatively speaking. It hasn't outperformed gold. It's been kind of similar to slightly below. So, my opinion is if you were kind of asking if you wanted to make a sound money bet today, which is on a relative basis cheaper, I would say Bitcoin because it hasn't moved yet. And a lot of Bitcoin people are like, hey, what's going on? Gold's going up and we're kind of flat. And my response to that is just wait. You should be happy that gold's going up because it means Bitcoin's about to go up next. That's the pattern.
Well, I think maybe I'll let you comment on why gold's been outperforming Bitcoin. Maybe the user profile, the investor base of Bitcoin has changed. Maybe it was retail before in 2020. Now it isn't. What do you think?
Oh, that's a part of it. I mean, certainly there's broader distribution. Certainly there are some early, investors who are selling. There's some people who believe in this 4-year cycle, and we're kind of at the top of that 4-year cycle. And so they think maybe 100,000 is the top. I mean, it trades funny. It trades like a wild animal. You never really know what it's going to do. But I think we're going to wake up and one day it's going to be a lot higher. And it's interesting because if you look at it historically, if you miss the top days, you really miss a lot. And so, I wouldn't not hold Bitcoin here because I think when it does wake up, it'll move far and quickly. So, it's to me, they're both, I've got charts. Actually, if you want me to, David, I could try and share them. But I've got charts that show the two
please.
mapped against one another.
I do wonder why Bitcoin hasn't fundamentally, just maybe fundamental reasons for why Bitcoin didn't exceed or even meet your expectations. You were more bullish on Bitcoin earlier in the year than you are now. I think you even called for potentially $200,000 as your upside target. A lot of people made those calls, by the way. Bitcoin had a great run last year. Why did it stall out this year?
There, you can see my screen. So this is a chart mapping. So first of all, let me just say, I'm extremely bullish on Bitcoin longer term. Okay. I think it is going to 200,000. That hasn't changed. I think last time I spoke to you, I thought it would be there by now, and it's not. It's at 100. But this chart here is very interesting because what it does, it shows you. So the yellow line is the price of gold, and the orange line is the price of Bitcoin. And if you look at the left-hand scale, that's the Bitcoin price. Okay. If you look at the right-hand scale, that's the gold price. And so the scales are different. This is interesting to note. Notice how they generally have tracked together, but also notice how the scales are different. So while gold started this chart at 1,500 and it's gone to 4,000, Bitcoin started this chart at 10,000 and it's gone to 100,000. So gold's gone up, 3x or a little over 2.5 to 3x, and Bitcoin's gone up 10x. But notice that here's what I was describing before in the earlier days in 2019. See how there was the Powell pivot right there, and gold went up quite rapidly, and Bitcoin flat as it can be. Then COVID comes along in the first quarter in March, big shock, big print, gold rips higher, Bitcoin's still flat. Okay. And then one day, Bitcoin woke up and went from 10,000 a coin to 60,000 a coin quickly. Okay. Then liquidity got tighter. Sam Bankman-Fried, but the real liquidity got tighter is in 22. Powell started upping rates, and this was right around here, and gold kind of had a little left in it, but then it came down. Bitcoin came down much, much more. So what this chart shows you, I believe, is just how sensitive, how much more volatile Bitcoin is, but they both are moving in the same direction, and how in general, gold has been a leading indicator of Bitcoin. Now, if I take this thing up here, and sadly, this is not updated. This chart's a little bit old. But the gold nut line, you can see it goes up to 3,500 here. Well, of course, it should go right off the chart because it's been as high as 4,400. So again, the gold line has moved, and Bitcoin is kind of pinned at 100, 110, something like that. So my sense is that Bitcoin is going to wake up and it's going to move hard. So I'm not really worried about it. But you're right. I did blow the call in the sense that I thought it would be there by now. So.
And it's also interesting how Bitcoin underperformed the NASDAQ in a year where both assets were technically bullish. Typically, in a bull market, it outperforms stocks. That's what it's done in the past. I wonder if the institutional shift, once more, the buyer base, that has something to do with the fact that it's just been underperforming, or something else here.
Yeah, well, I think it's mapping it against the NASDAQ's tricky. I think they're two different things, but they both are driven by liquidity. I mean, one thing that is very true about Bitcoin is that it's a liquidity-driven thing, and it also has some portion of the Bitcoin demand is all the other altcoins and all the other cryptos, which I think are nonsense, to be frank. And so, I try to avoid those coins, and I just focus on Bitcoin. And I think that, I do know that there were people on Wall Street who were doing something along the lines of they were shorting Bitcoin, or they were shorting Bitcoin and going long the Nasdaq, which I think is a colossal mistake. But because the two they were correlated, they thought that was a good pair trade. I suppose people could see that and believe it. I personally don't think it makes any sense at all, but it is what it is. But let me I'm going to pull up another chart that I think you'll find interesting. So this is a chart. This is from a New Orleans investment presentation, which I just gave at the conference. So notice same chart as before, Bitcoin and gold. Gold in this case is white, and the Bitcoin is orange. And if you lag the two, what you see is that again they match up better. They match up more closely when you do a 100-day lag. And so again, over here in 2025, what we've seen is, as we all know, in September, gold really broke out and went on a tear. It went up to 4,400. Bitcoin's just sitting right here. But that means in my book, it's pretty close to probably following through. So I just think it's another interesting data point about, the trend on both the assets. And I mean, the important thing, David, I know you understand it very well because it's the area you cover, is that what's happened is the world has become very aware of this monetary debasement trade. You see JP Morgan talking about it. I mean, I was shocked to see Morgan Stanley changing their allocation. They were 60% stocks, 40% bonds. Now they're recommending 60% stocks, 20% bonds, and 20% gold. And I was like, wow. I mean, they manage trillions and trillions of dollars. And so you're seeing a growing awareness of what those of us in the sound money community have been saying for, decades, but most particularly last few years, which is they just can't stop printing money. And, we're now seeing, as we move into current events, and I'm sure we'll talk about this, we're now seeing all kinds of indications. I mean, Powell at the recent press conference said the money, the balance sheet would have to grow. Lori Logan, one of the Fed governors, she said indeed the the balance sheet was going to have to grow. I mean, this is really QE. No, they're not calling it QE. They're just saying, well, we're just expanding it to make the plumbing work. And, okay, that's a nice excuse, but let's face it, it's money printing. So, the market has figured that out, and that's why gold and silver and Bitcoin prices have been so strong.
The US and China are battling over mineral supply chains and technology supremacy because globalization stepped out of equilibrium. And you can see just how, when looking at the strategy behind both superpowers, they're taking shape and they're reshaping the entire world. Now, Trump uses tariffs and deregulation to begin the process of realigning mining and securing resources on US soil, while the Chinese government is using their near monopoly status, scale, and reserves to their advantage. Today, I want to talk about and showcase a company that is actually trading at its 2025 lows right now, down nearly 70% from its highs in Q1. Giant Mining Corp, ticker symbol BFGFF, is a sponsor of today's video and the owner of the Majuba Hill Copper Project. Since President Trump's inauguration in January 2025, his administration has aggressively pursued policies to secure U.S. mineral independence, with copper emerging as a flashpoint in escalating tensions between China and the U.S. Copper is vital for defenses and AI infrastructure, and it underscores America's vulnerability to foreign dominance, particularly China's control over global copper refining. In February 2025, President Trump signed Executive Order 14220, initiating a Section 232 investigation into U.S. copper imports and classifying the nation's dependence on foreign suppliers as a potential national security risk. Subsequently, the U.S. imposed 50% tariffs on semi-furnished copper products, including wires and cables, effective August 1st, 2025. Now, on October 6, 2025, President Trump approved the Ambler Road project in Alaska, unlocking access to rich copper and zinc deposits and facilitating the permitting of more than 1,700 mining claims. This is the start of the rebirth of the American copper mining business. Giant Mining owns a past-producing copper mine in Nevada, one of the most highly sought-after mining jurisdictions in the U.S. Here's some more important information about the company's deposits. Historic underground mines at the Majuba Hill project produced copper, tin, and silver from the early 1900s to the 1950s, including 2.8 million pounds of copper, 184,000 ounces of silver, 5,800 ounces of gold, and 21,000 pounds of tin. Importantly, the project is surrounded by developed infrastructure, including access to roads, power supply, transportation, water supply, and ore stockpiles. Do your homework on Giant Mining, ticker BFGFF, today. I'd like you to address this, please, just on that note.
Sure.
The BIS, Bank of International Settlements, has put out some reports recently about the rising debt issues around the world. This is from a recent report that they published. They're warning that record global share prices appear increasingly disconnected from the rising concerns about government debt levels in the bond markets. 30-year debt premium investors demand to buy the rise in the premium that investors demand in the 30-year debt show mounting concerns about the fiscal outlook. Can you just comment on that? Are the stock markets disconnected from the rising fiscal concerns that some people may have? Do they even have to be connected, Lawrence?
Well, it sure feels to me like what they're saying is correct. I mean, what's I think happened here, I mean, and I don't know if you're familiar with the term crack up boom, but I think what's happening here is that, the government and everybody has kind of come to realize that to keep the economy going, we have to keep all these numbers going up and to the right. And that means both the stock market, it impacts, gold, silver, and Bitcoin. The bond market, meanwhile, is, in my belief, going to have a fit over this eventually because, the bond market's been calm because there was a time, they were reducing their balance sheet and they were trying to maintain discipline, with higher interest rates. But what we're seeing, we know that Powell is out in May of 2020, next year, 2026. And so, yes. And we know that, it was amazing to me. You got the president of the United States calling him a moron, and an nincompoop and saying he's too late. And just kind of beating on him. And, he's going to appoint somebody who's going to drop rates, and that dropping of rates will lead to all kinds of refis and another round of inflation. So this is mapping. I think in our last conversation, we did talk about this. This is really kind of mapping out against the 70s. It's very similar, right? Where you have these waves of inflation. And the Fed tries to fight them, but then you get the next wave. And so, I think that's what's going on. As for the stock market's a very tough thing to call. I mean, it's not cheap by any measure, but there are those who argue that there are new measures and new metrics are appropriate in this free money world that we kind of live in. And they may be right. I mean, I've lost money trying to be short the stock market at various times over the past 10 years. I regret doing that. I didn't understand what was going on. So, I would not be shorting stocks here, but that doesn't mean I'd be buying them either.
Well, do you think the AI stocks of this year just stolen the investor base for Bitcoin? Is that one of the
Well,
reasons
that's
why?
part of it. That's certainly part of it. And those stocks are it's crazy. I mean, look at Nvidia, it's a $5 trillion market cap. I mean, and there are a lot of people think AI is a bubble. I think AI is important. I think it will change the world. I think it's a fantastic technology. However, just like the internet got ahead of itself in 2000, I feel like there's some of that going on in AI. And yeah, I do think that's stolen a little bit of the thunder from other things.
Why do you say that you don't like the other cryptos? Are they not sound money for you?
They're really not. They're not. They're constructed differently, and I try not to be as. Sometimes I'm very mean. I call them shit coins. I get that other people are trying to do projects that enhance, functionality, and Ethereum has contracts and smart contracts, and people are trying to tokenize things. And all those. That's all great. I mean, there's to the degree that you can use cryptocurrencies to do things, to tokenize things. That's got value. I don't dispute that. But what I'm trying to point out is that there's really no cryptocurrency or none of any size. There are a couple of small projects that are similar. There's no cryptocurrency of any size that has the proof of work and the network scale and the immutability of Bitcoin. I mean, Ethereum's, monetary policy has changed 7 or 8 times. I mean, all these other coins have somebody leading them who's kind of quote unquote the CEO. I mean, one of the beautiful things about Bitcoin is it's distributed and there is no CEO. And it's all based on consensus and it's all based on nodes and miners and people voting on what they're going to use. And so, you can hard fork Bitcoin and try and say, I'm going to go over in this direction and fine, but nobody would follow you because everyone's going to stay with the one that's the leader. So yeah, I just think a lot of the other projects, some of them are just outright scams, right? I mean,
Sure.
we had Sam Bankman-Fried, we had, Alex Mashinsky, we had Monero. I mean, there was just a lot of very, very bad actors who would spin up a coin, try and sell it, run the price up, and then they would dump their coins and take money from people. And that was just criminal behavior. The SEC's tried to crack down on that, but some of that's still going on. I mean, even guys like Elon Musk support something called Dogecoin, has no notable use case, and yet it's still got a multi-billion-dollar market cap. It puzzles me. But to me, Bitcoin itself is actually a technology. It's an invention. They solved a problem, a computer science problem that had existed for a long time that other people tried to solve, which is how do you trustlessly, secure digital information so that, it can't be cheat. You can't cheat. You can't double spend. And it's called the Byzantine generals problem. And Satoshi or whoever the Satoshis were, they solved it. And, in the beginning, I was quite skeptical. I thought, no, that's not possible because there were 3 or 4 other prior experiments where they tried it and it didn't work. And so, but here we are, we're 16 years into it. There are 920,000 plus blocks that have been mined and it's been adopted and, more and more people are coming to the conclusion that, what, this is immutable and this is a scarce entity and it is a scarce ledger. And it doesn't necessarily have to be physical the way gold guys think that if it's not physically sound, it can't be money. So that's
Does
where
the
we are
way
with it.
does the way the price chart move change how people perceive something as sound money or not? For example, let's take gold. It's skyrocketed parabolically in the last year and a half, up about 120% or something, depending on which day you're looking at. Does that change your perception of whether or not it's sound money, just based on how volatile it's been, even to the
That's a great
upside?
point. Some people make the point about that same point about Bitcoin that it can't be
Yes.
quote unquote sound money. Yeah, I like to turn that actually on its head and say, is it gold going up or is it the dollar going down? And the same with Bitcoin. And I think that, I think the reason I define sound money is money that is not issued by the government, because we all know the government can print more, and money that has a fair set of rules around it. And, gold is geologically constrained and, you can't fake an ounce of gold, although people have tried. And Bitcoin is mathematically constrained. Those sound monies with limited supply outside of the government system, in my opinion, those are the only sound monies that exist. Now, compared to fiat money, the government's money, they might, the prices might fluctuate a lot. But I actually think that's more of a commentary on the fiat than it is on the sound money. I mean, 1 ounce of gold is 1 ounce of gold, one Bitcoin's one Bitcoin. I think the reason the prices have been so volatile in this transition period here is I think we're going through a period where fiat is really being questioned. And, you're now, we got, I mean, I like to liken it to like we're in a theater and there's a little bit of smoke and a few people are like, whoa, hang on a second, I want to get out of here. And pretty soon everybody's could figure it out. And, I mean, a lot of people think the price of gold at 4,000 is high. I don't. I think it's low. I think gold's going to 10,000, 20,000, 50,000 because that's how much fiat money has been printed in the same way that I think Bitcoin is going to much higher prices too. So to me, the volatility is more a comment on the loss of faith in the fiat system. I mean, if you look at a chart of what happened in any great hyperinflation, it always starts out slowly, but then over time, money is a confidence game, and if it comes to the point where we all lose money or all lose confidence in the money, it's gonna fail very quickly, and so it'll be very volatile. I mean, I'm sure you've seen the Mermacan Capital chart that shows the volatility, right, during Weimar. So
people talk about this loss in confidence of the fiat system, but it's not like we can do anything about it, Lawrence. We can't just move to another system. We can't just like we're moving neighborhoods, right? So what do we do?
No, we're kind of stuck in it. Most people, you have to pay them in dollars, Canadian or American, but
sure.
But the marketplace is bigger. So what the bet that I'm making, and the bet that those of us who are betting on these alternative currencies, and that's really what they are, because the dollar is the leading currency still, despite the fact that it's slipped, is that the market's bigger than the government. And if people, it's called Gresham's law, right? If people continually lose faith in the government's ability to control the printing of their paper, then they're going to select these other forms of money, and pretty soon nobody will want the dollars. And we all have seen the stories of Venezuela where the bolivar was just laying around in the streets because they're worthless. And so, we're not anywhere close to that. I don't think that's not even a tail. It's a remote tail case. But my point is that great inflations have occurred when governments have misbehaved, and I think that what's going on now, and this is reflected in the J.P. Morgan comments and others, is that more and more people are coming to realize that the government is really behaving responsibly or irresponsibly, and that quote unquote irresponsibility is growing. Let me give you an example. So Trump got in and they established Doge, and it was a noble effort, the Department of Government Efficiency, and Vivek and Elon were going to go save, and Elon said we're going to save $2 trillion. I mean, it's ridiculous. They said we're going to save $1 trillion. Well, that's still pretty aggressive and ridiculous. Well, now it looks like if you Google it or Chat GPT it, it looks like they're maybe saving $100 billion a year, which is still a lot of money, but in the context of a 1.8 trillion deficit, it's not that much. And then in turn, the big beautiful bill, which just the Trump, Republicans just passed, increased the spending by 300 or 400, billion a month, or I mean a year. And now the tariffs are bringing in some money, but it's now, I read in the Wall Street Journal this morning, it's looking like he might lose the Supreme Court case on the tariffs. And I guess the point is that intelligent money managers are seeing that the government is just trapped and they just keep printing money. And it's actually kind of math, David. I mean, when you have a credit system that's based on debt and the debt is continually growing, if you don't grow the underlying supply of the money, the debt would default and you would have a big deflation like 1929. And so really they have to inflate. What they're hoping to do is inflate slowly enough that fast enough to keep the system together, but slowly enough that people don't revolt or don't complain or don't leave the dollar. And that they're kind of zigzagging back and forth. But and I mean, obviously they blew it. COVID came along, they grew the money supply 40%, inflation shot up to 9%, right? And then Powell said, "Holy shit, this is a problem." He slammed on the brakes, took rates up very quickly, and inflation's come from 9 down to 3. But even the 3 is not their target. Their target's 2. But now they're kind of saying, well, 3 is good enough for government work, and the financial system is seizing up. We got to cut rates again, and of course we're going to get another wave of inflation. So that's kind of how it works, right?
Let's talk about your book, The Big Print, What Happens to America and How Sound Money Will Fix It. It's been out since February now, and it's very timely that we're discussing this because we're talking to about this issue in November. We're on the cusp of the Fed ending quantitative tightening, which they've been doing ever since 2020. As you're aware, the balance sheet of the Federal Reserve went from $9 trillion down to $6.6 trillion, and now they're going to stop reducing their balance sheet size. What happens then to the money supply? How does this fit into your book, The Big Print, especially in conjunction with the Fed lowering rates like you talked about earlier? And we've got fiscal dominance, right? A lot of, like you mentioned earlier, a lot of spending. So there's just multiple forces going on at the same time that could point to higher levels of money supply.
Yeah, so you're absolutely right. They've announced they're stopping the tightening. They're going to cut rates. Cutting rates will get the banks active in making more loans. Making more loans is how M2 grows. M2 growth is what leads to inflation. I mean, there are a lot of confusing pieces around it all, but at the end of the day, they have to inflate or else the system is going to die. And they're getting signals on that right now. I mean, the SOFR rate is over the Fed funds rate. The standing repo facility has been drawn very heavily. And both the Fed governors are talking about it. I mean, there was a time when they were being tough, and they're not. It's not a choice for them, and they're trying to paint it as this is all just normal. Nothing to see here, folks. We're just going to kind of start to lubricate the system so it doesn't seize up, and that's fine. That's their spin on it. But the reality is they don't have a choice. If they don't print this money, the system is going to collapse, and that's what the book talks about. I talked about first half of the book is how the system is broken, how we got here, the history of America, and the history of the monetary system. The second half of the book is how do you protect yourself, which is really three ways: buy gold, silver, or Bitcoin. And so. Yeah, I mean, I predicted this was going to happen, but the path is uncertain, David. I mean, they haven't done a big print yet. It's interesting. I mean, let's just look at the history. They did a couple of big prints before this. I mean, the first one was 2008 in the GFC when Bernanke took the Fed balance sheet from 800 billion to 3+ trillion. And then the second one was COVID. And what I would submit is that they're trapped in a cycle of these, and the third one's coming. And I don't, does it happen tomorrow? Does that mean a year from tomorrow or 2 years? It could be as long as 2 years. I kind of don't think they'll make it that long or that make it that far. I tend to think that it's going to happen in the next 6 months, maybe a year at the most. But they're going to have to loosen monetary conditions substantially. And the good news about that is it'll keep the economy humming. But the bad news about that is it'll bring inflation back. So, for every action, there's a reaction. And making money easier that's the problem, right? That's the inflation problem.
I wanted to address this issue of sound money. At its core, we like sound money because governments can't print more of sound money, right?
Right.
But this particular op-ed by an economist by the name of Barry Eichengreen, brilliant guy, I've hosted him before on my show, he was warning us about the Genius Act. I'm just going to read a few sentences from this op-ed here. The Genius Act will bring economic chaos. If Donald Trump and his allies have their way in Congress, America could soon see a resurgence of other features of that turbulent century. He's talking about the 19th century, where you're ambushed by gold seekers, gun-toting bandits, so on and so forth. Bank failures, personal bankruptcies, financial instability also occurred regularly. What would unleash this chaos is a piece of legislation known as the Genius Act. You and I haven't talked about this yet. It happened after we spoke last time. In its efforts to give crypto a patina of government authority and legitimacy, the Genius Act would give hundreds, perhaps even thousands of American companies the ability to issue their own currencies. Imagine Walmart issuing a Walmart coin, Amazon doing the same thing with Amazon coin, enabling them to bypass the banking system altogether. Now, that's an interesting perspective that we don't talk about often. Is that even true?
Yeah,
Can they do that?
I hadn't read that before, and I haven't thought very much about that. I don't think the Genius Act is going to bring economic chaos. I think the Genius Act was just a recognition of the fact that we live in a digital age and that digital currency is a part of our future. I think that Bitcoin is really the only digital currency that should be or will be a part of our future. But the Genius Act is just encoding that, and I think it was done by the states and the U.S. And I think the reason Trump embraced it was that enough people that are involved with Bitcoin and all cryptocurrencies in general said, "Hey, sir, you realize that China's betting on gold, and yet the future is probably in digital things. We're going to be better served to have clear legislation and rules about how to do these digital things." And so, in my view, that's what created the Genius Act. I think what Barry's doing there is he's extrapolating to assume that all kinds of bad things might come out of it. And look, it's entirely possible that Amazon or others, and they're, I mean, sadly, it does allow anybody to do anything they want, with cryptocurrency, or not anything they want. There are rules and laws around it, but it makes it clear what the laws are for crypto. And some would say, well, that's going to lead to a lot more bad crypto, and it might. I don't know. I mean, I don't think Amazon coin's going to catch on. My view is it just codified the rules surrounding the existing crypto system, and it's a net good thing because it allows people to know what the guardrails are. I think at the end of the day, Bitcoin is going to emerge as the one cryptocurrency that matters. I mean, you won't, all these other currencies that I don't like, I don't think they'll be, I think a lot of them won't be around in 5 or 10 years. So.
Well, that leads to my question about how this would affect Bitcoin. How would the Genius Act impact Bitcoin? In theory, you've got a bunch of competing crypto digital assets possibly emerging. Stable coins are going to take front and center. One or two things could happen. People could realize, you're right, Lawrence, all these things they're not sound money. Let's drive capital into sound money. Or it's going to suck capital away from Bitcoin into some of these newer projects.
It's a really good question, David, and I've thought about it, and I don't disagree with you. That's a risk that people go down the wrong trail. But I think that those of us who are in Bitcoin, those people who study Bitcoin, and those people who've been involved with crypto and had the rug pulls. I mean, crypto really is, generally speaking, quite fraudulent, and it's kind of gambling. And I know people like the one that took off recently was the Zcash thing, and I mean, it's gambling. It's really the only way to say what it is. And so, okay, there'll be more of that. But, what I'm trying to do and what I tried to do with the book was point out that that's gambling, but that investing in a form of money that's digital gold, which is what I think Bitcoin is not gambling. It's compounding, your savings over a period of time and helping you stay ahead of inflation. I mean, the problem for the average family is, I believe, is trying to save for their retirement in a form that won't get taken away. And because we know inflation is always there and persistent, if you just save in fiat dollars and you get 3 or 4% interest on them, or you save in bonds, you get up maybe a little higher for more duration, you're really falling behind. And gold has traditionally been the best protector of that. And now Bitcoin, if you can handle the volatility, it is volatile, but it's been going up and to the right, even compared to gold. And so, I believe it's a very, very asymmetric thing to hold, that it'll be much, much higher in years ahead.
When you said that sound money hedges against the debasement of fiat, are you talking about all fiat, or are there specific currencies that you're slightly more bullish on? For example, if you just take a look at the DXY chart that I have here, the DXY is a dollar versus a basket of other currencies, versus a basket of other fiat currencies. It has been strengthening on a secular bull trend since 2008. So what do you think of the global fiat system? Is there anything you like?
So you've touched on an area that's a friend of mine, Brent Johnson, from Santiago Capital, who coined the dollar milkshake theory. Brent's right. I mean, the dollar isn't a great currency compared to gold or Bitcoin, in my opinion, because it's being debased, but it is better than all the other fiat currencies. What do they call it? The cleanest dirty shirt. And, that index just measures the dollar against the yen and the pound and the euro and the other major currencies. And as bad as the dollar is, those other currencies are probably worse. So I don't really think about things kind of one fiat against another. It's kind of like, one crypto against another. I mean, I think they're all not so great. And, what I measure is just kind of, okay, if that system isn't a good system, that those are being, watered down with new issuance all the time, how do you own something that can't be watered down? Well, you buy things the government can't print, and gold, silver, and Bitcoin are the three currencies. Real estate's another sound asset that they can't print, but it's got a whole different set of issues in terms of management and taxes, and hard to sell and hard to move it. but it does tend to protect you against inflation. So,
what is your view on inflation? We talked about more money supply. How high can inflation get?
That's a great question. I personally believe that in this next cycle, we'll break double digits. The last cycle, we went up to 9. I mean, let's start at the beginning, though, because my book actually talks about this, right? They cheat on the inflation numbers, okay? There are alternative inflation measures that show that inflation is much higher than people talk about. Like right now, as an example, I think they're saying inflation is 3%. I got to believe the average consumer going to the grocery store is not seeing just 3% inflation. I mean, I know, I mean, and inflation measures a lot of different categories, and some of them have supply issues, like eggs went up for a while when they killed all the chickens. But the point is that, inflation's running higher than what they're talking about, in my opinion. You see it in insurance particularly, but um, so I think we're going to go into the double digits. And I think the reason we're going to do that is that they just have no choice, David. They have to print this money to keep things going. And, I mean, let me just say this. Inflation is very, very directly measurable by the money supply. I mean, it's as simple as there's so many goods and services in the world, and there's so much money in the world, and the money is competing for the goods and services. So if you double the amount of money in the world and hold everything else equal, the price of the goods and services is going to double. And so, they printed about 40% of the money supply in COVID. And, surprise, grocery prices are up about 40% since the beginning of COVID. And over a long period of time since 71, that money supply has grown at about 8%. And I think that's
What happens?
the
What
real rate
happens
of
to the average person? What happens to the average person who can't afford a big investment portfolio of Bitcoin and gold or whatever the other sound money that we're advocating
Yeah,
here?
well, I really feel sorry for that person. I mean, I think they've got to do the best they can to live as cheaply as they can and to try and save in their money in a currency in gold or Bitcoin. I mean, the other thing I would say is they want to be working in industries that are, where they have pricing power and where the labor is valuable, and they can demand more for their time, because if you're in a highly competitive industry and there's this excess of labor, your wages aren't going to go up. You're not going to be able to keep up with inflation. People who are very skilled generally do keep up with inflation. I mean, look at the airline pilots, when COVID came along, and I saw a lot of airline pilot deals, they were all negotiating, 12, 13, 14% annual pay increases, for multiple years to keep, the longshoremen did the same thing. But if you're some poor slob and you don't have any negotiating power, what happens? The cost of your groceries go up and your minimum wage doesn't go up, and you're losing ground. It's really sad. It's part of the reason why I wrote the book. Excuse me.
So let's suppose I'm making an average salary.
Yeah.
What portion of my salary would be reasonable to allocate into something that is sound money?
Well, if you read the Richest Man in Babylon, which is a classic book on how to build wealth, they make the argument that, no matter what you're making or what you're living on, figure out a way to live on 80 or 90% of that and save 10 or 20%. And then you're paying yourself with those savings. And then you take those savings and, so, I mean, I don't know what that means. I mean, if it means eating more ramen versus steak, so be it. You do it. But you take those savings and you invest them in things that will compound over time. And then you let time do its thing. And eventually those savings, I mean, everyone should have a financial calculator and play with compound interest. And what you see is that if you have an asset that's growing at 10, 15, 20, I mean, right now the compound annual growth rate of Bitcoin, the last 5, 6 years, it's about 39% a year, which is really quite stunning. So, if you can say 10% of your salary, put it into Bitcoin and get 39% a year, that 39 is coming down over time as Bitcoin gets adopted. But my point is, and keep doing that over a bunch of years, and you're relatively young, I mean, this is the formula for wealth building is saving and investing in things that beat inflation. I mean, this is one of the guys who's been a big supporter of my book is a really good guy named Robert Kiyosaki. He wrote Rich Dad, Poor Dad. He sold 50 million copies of that book. Isn't that amazing? I mean, it's one of the all-time great wealth building books. And really what he read that book, and it talks about the exact same formula that I'm talking about here. You have to save, you have to pay yourself first. You have to save part of what you earn. You have to take that and you have to put it in things that get a return. And then you just let compounding do its thing. And, if you do that, if you're in your 20s or 30s and you start doing that on a consistent basis, it's very hard to end up being 50 or 60 and not have serious wealth built because of the compounding. So, and I'm not sure all young people know that. I mean, sadly, a lot of them don't understand that issue. And this is why they vote for Mondami to give them things and to run New York, right?
Could that in theory work, since we're just talking about that? There's just this huge discussion. I've seen every single social media post is about this. Giving away free stuff, taxing wealthier people, and increasing, I guess, the standard of living is the promise for the middle class and the lower class. In theory, could that work? If not, why?
Yeah, well, it's extremes. I mean, it all depends on a matter of degree, but in general, socialism doesn't work. I mean, socialism is taking money from productive people and giving it to unproductive people, and it's relatively unfair. And what happens, obviously, is that, the productive people respond accordingly. I mean, you and I were joking before we started recording that there was a meme on Twitter that showed a picture of Mandami and called him the Florida Realtor of the Year, right? And so you start taxing people like crazy. They're gonna, all the people who make money and paying the tax, they're gonna leave New York, right? And look, I mean, I'm very sympathetic to the problem he's tapped into, and I'm very sympathetic to how people in the country, from the middle, the upper middle class, from the middle class all the way down to the poorest, are really, really suffering, David. I'm super sympathetic to that. It's absolutely horrible. Okay. So I see these people suffering and I get it.
Yeah.
The problem is that what's being talked about here is not the solution. The taxing, they can't tax their way into giving these people enough, and they're going to drive the productive people out. And, it's not the correct solution.
What was that quote? The problem with socialism is that eventually you'll run out of people to tax.
Well, that's exactly right. But back to the fact that, as I said earlier, I'm very sympathetic to how badly some of these people are hurting. The way to stop them from hurting is to return to sound money. If we return to sound money, the minimum wage would be higher, and we'd just, in every respect. I mean, you wouldn't have your grocery prices going up as much, et cetera, et cetera. It would all just be a much fairer world. I mean, the government wouldn't be wasting money on wars.
Yeah.
There'd be a lot. Look, we could spend hours talking about that
Sure.
topic. Okay. Well, let me just say that I made a real effort in my book to explain how and why sound money will solve a lot of these problems. It's kind of like the old draining the swamp. Yeah, you can go try and kill an alligator here, an alligator, totally drain the swamp so they don't have any water to live in, they'll die. And that's, I think that's the case with sound money. If we return to sound money, some of these problems will kind of solve themselves naturally.
I just wanted to put this up. We were talking
Oh yeah,
about
what
real
is it?
estate.
Let's see.
Greg Abbott, the governor of Texas, threatened to tariff people moving from New York. After the polls close tomorrow night, I will impose a 100% tariff on anyone moving to Texas from New York City.
I love it. I mean, things are tough out there, but you have to try and find humor where you can find it. I mean, when I saw that meme of Mom dying as the Florida Realtor of the Year, I thought, boy, that's spot on.
I want to close off on gold stocks because I know you manage gold
Sure,
stocks.
I love gold stocks. Yeah,
People have been taking profits around $4,000 gold on their
sure.
stocks as well. Have you been doing that? And if not, why not?
Selectively. So let's talk about the gold stock market. So gold stocks were just criminally undervalued a year or two ago, and we're undervalued when gold was 2,600. Gold at 4,000 or 4,500, their profits have, in many cases, doubled or more than that. Okay. And so the stocks went up a lot this year. I mean, the averages are up about 100%. My fund was up 130 through this September. And they've gone up a lot. And so the natural reaction is, oh gosh, I've got a profit, maybe I should take it. And I get that. And I've selectively been selling some that went up too much, in my opinion. But if I had to put this in baseball terms, I would say we're in a gold stock bull market, and I think we're probably in the second inning, because they really, even though they've gone up, they haven't fully adjusted for the new higher price of gold. And I don't believe we're stopping at $4,000 gold. I think we're going to gold 5, 6, 7, 8, 9, 10,000. And so, let's say we did stop here. For sake of argument, let's say 4,000 is the peak in gold. I still think the stocks could double to get their cash flow multiples to more like market multiples. I mean, and then in turn, if we take the price of gold up even higher, well, then you're going to be applying that new higher multiple to a higher profit piece. So it's new people coming into my fund. They say, what can I expect? And I say, I don't know. I don't know how high the price of gold will go, and I don't know how much these stocks will go. But I don't think you're too late. I guess to somebody who's looking at buying gold stocks, I don't think you're too late. I mean, you definitely missed the first inning or two, and maybe even the third inning, but it's a 9 inning game at least, and I'm pretty confident that these stocks will at least double again from here in the next several years. And after that, it gets fuzzier. Do we get fiscally responsible? Does the gold price stop going up? I mean, there are a lot of different factors that'll come into play. But my point is that I don't think the bull market is over. And, but having said that, could we correct 20% from here? Oh yeah, absolutely tomorrow. The gold stocks are up 100%. Could they go down 20% so they're only up 80%? Absolutely. But in my view, that would be a buying opportunity, not there's no reason to sell them right here.
Okay, so why aren't the mining companies right now doing as many deals as they were in 2011, the peak of the last gold bull cycle?
I think they still don't believe it either. I think everybody's kind of, I don't know who I know you have a lot of gold listeners, gold stock
Yeah,
listeners. I mean, there was an apocalypse in this industry from 2011 to 2015, right? And
yeah.
so many people got so badly burned. And that's 10 years ago now, but people remember that. And everybody, and that had all kinds of mergers and acquisitions and stupid stuff and overvaluations, and people were paying 25 times cash flow. I mean, before this whole thing started, I was paying 4 times cash flow for a lot of companies, and now maybe, now I'm paying they've gone up 100%, so I'm paying 8 times old cash flow, but because prices are higher, maybe I'm paying 6 times new cash flow, or sometimes lower. It all depends. There are a lot of moving pieces, but the point is that they're not terribly overvalued here. They're just not, and in fact, they're still undervalued, not as deeply undervalued as they were a year ago.
It's kind of a self-fulfilling prophecy when you think about it. If you don't believe it, you sell, and then it doesn't happen.
Yeah.
So,
Yeah, well, I don't know. No, but it's really driven by macro conditions. I mean,
sure.
I think what you have to ask yourself, and the risk to this thesis, okay, and I have new investors come in. They say, what can go wrong? And I'm always thinking about what can go wrong. And people laugh when I say this, but I'll say it. What could go wrong with this thesis? The U.S. federal government gets really responsible. And
Yeah,
you'll laugh, I'll laugh. We know that right now, given what we can see, the odds of that seem pretty damn low, right? But if the crisis develops and gets even worse, if the boomers have less voting power, and the younger generation say, hey, we got to cut back these entitlements substantially. If we make peace around the world and close down our military bases. I mean, these are all things that feel like a long shot today, but at some point in time, we might fix that stuff. And if and when we do, and they're not printing as much money, well, then there's not going to be as much need for this stuff. But like I say, today I don't see any evidence of any of that. So, to me, I've got a green light, for these things to go higher. And I think we're just, I think we're at the stage. I mean, here's another interesting stat, David. You'll like this. It was in my quarterly report, which, by the way, is on my website,
yeah.
ema2.com. 62% of the country owns less, well, 40% of the country owns zero gold. These are investment. Bank of America survey of U.S. investor accounts. 40% gold allocation, zero. Okay. 22% gold allocation, less than 2%. Okay. So 62% of the country effectively owns no gold. Okay. Gold allocation over 7%. It's like, 10% of these accounts. So, this is not the way bull markets end. I mean, bull markets end when, everybody and their brother is talking about gold stocks and the price of gold going to 20,000. And, we're still at a stage where the world is just kind of waking up to this whole thing. So, and what you want to do in investing is you want to find a trend and get in front of it. And, and yes, these things have moved 100%. Okay, I get it. You might think you've missed it, but my sense is that they're going to move 200, 300, 400, 500%. I mean, I can't guarantee any of those numbers. I feel
Sure.
pretty confident about the next 100, but after that, it gets fuzzier.
Final
So,
question then: allocation between gold, Bitcoin, stocks, gold stocks, percentage-wise in somebody's portfolio. In your portfolio,
yeah.
how would you
Well, I'll tell you what
tackle
I've
this?
done, and everybody has to make their own decisions. So,
Sure.
personally, I'm about 60% Bitcoin and 40% gold and gold stocks. But frankly, that happened because my Bitcoin grew so much, right? I started much lower and Bitcoin went up 5 or 6x. Um,
Well,
so
that's
old
interesting in
people,
itself. Sorry, I don't mean to interrupt you, but
yeah,
you didn't think about maintaining a certain weight in your portfolio that's fixed and then taking some profits out of Bitcoin.
no, I just bought it, and I mean, I
Okay.
believe in both of them, and so and as I say, at the margin today, if I had excess cash, I'd probably buy Bitcoin, not gold, because I think Bitcoin's a little relatively underpriced. But let me address that for most people. Look, Bitcoin's volatile, no doubt about it. And so, I've got clients and people in my fund who are 70, 80 years old. They say, I don't want to have something that could go down 50%. And I say, fine, don't buy it. Or if you want that option, if you want the asymmetry, put in 5%. If you have 5% of Bitcoin in your portfolio, it goes down 50%, you lost 2.5%, your life's not going to change. It goes up 10x, that 5% becomes half your portfolio, right? And I think, by the way, I think it could go up 10x. I mean, I know it sounds crazy, but that's what I believe. So the other thing I say to people when they're thinking about getting from gold to Bitcoin or getting into Bitcoin in general is I say to them, look, pick a number that you could put in there and you knew that if it went down 50%, you'd think, oh, it's cheap, I want to buy more, not, oh, I made a mistake and I'm going to sell it. Because
Yes.
the people I've seen who've gotten hurt buy it after it's done a big price run, they chase it, then it, like everything, like all financial assets, it has a correction, and then they think, oh, shoot, I made a mistake, and they sell it. And it is a fact that since its inception, anyone who's bought it, even if they bought it at an absolute peak, if they waited 4 years, they had a profit. And that's kind of a continual running piece of math that's out there. So, when people are getting into it, I often suggest to them that they dollar cost average. I mean, a month ago, it was 126,000. Today, this morning, I think it was 100,000. So
Yeah.
26% off sale. And by the way, next month it could be 75,000. I think if that's the case, there's probably some gold stocks I'll sell to buy it. So I mean, because I'm quite convinced that it's going to much, much higher numbers over a period of time.
All right, great. Well, thank you very much for your time today, Lawrence. Where can we follow you?
Thank you, David. Well, as you know, I'm on X/Twitter as Lawrence Lepard, and I make a lot of noise on there, and I criticize the investment banks because they deserve it. And I also I wrote this book called The Big Print. It's available on Amazon. No publisher has picked it up yet because it's pretty edgy, but you can get it in hardback, paperback, Kindle, and audiobook. And then I have a website called ema2.com, and that's my firm's website. And we have a quarterly letter that we post. Maybe you can put that in the show notes, but we have a quarterly letter that we write on macro conditions, and there's a way to sign up for that for free. And we'll never spam you. And so every quarter you can read our thoughts about what's going on in the market.
Very good. All right. Well, we look forward to reading your edgy book. So I'll put that in the link down below. So make sure to check that out and check out Lawrence on Twitter, X. He makes some very good tweets. Thank you, Lawrence. I enjoyed your talk.
Thanks,
Let's
David.
follow
Very
up
nice.
again